And right now, we're joined by Pimco's emerging markets expert, Michael Gomez. He's co-head of emerging markets there at Pimco. He's joining us from Munich, Germany. Michael, you were listening in. I can only imagine you had already expected to see some sort of deal to help out Greece. But today, are you still not a fan of the euro?
Well, I think that there are some major structural problems in the Eurozone, and that those are clearly being unmasked in this crisis. And so those are things that are going to take quite some time to work out. And the reality is that you had a currency that was pushed stronger and stronger and stronger as a result of some fundamental dollar weakness, and as Asia was pretty much tied to U.S. dollar levels. So a combination of some major fundamental issues in Eurozone plus stretch valuations meant that the euro had to come off. And so it's not really surprising that we're seeing this weakness.
Right. Well, we certainly did see a strong reaction because of this disappointment on the lack of detail from what we do know. Did anything you hear today change your outlook for Europe?
Not in the short term. I mean, today was much more of a political statement. I think the markets perhaps were waiting for and romancing something more concrete in terms of financial support. But this is not necessarily surprising in the sense that that support ultimately will come for Greece. But the markets are waiting for the details, and the devil will be in the details. At the end of the day, however, it's really up to the Greek government. They're going to have to tighten their belt. And there is no magic bullet, and that ultimately will decide where the markets go.
Now, you have found reasons to find some opportunities there in Poland in some of your emerging market funds, just as recently as February 9th. Tell me, what opportunities are you seeing now? Still interested in Poland?
Yes, we are. When we look at Europe, one of the few places that we think is a good investment value in this environment continues to be Poland. This is a country, even in the turmoil of 2009, posted almost 2% real GDP growth. It's a very well-run economy. It has a manageable debt load, a manageable fiscal deficit, and we think that the currency offers value, and we think the local markets are also attractive.
Now, we don't want to stay just confined there to Europe. I also want to ask you, you were out early in terms of a call on the real when you were looking at Lula coming to office there in Brazil. Now that we are looking at him leaving office, what's your outlook on the political situation there and how policy is going to affect investments there?
It's a great question. I think a major change in emerging markets over the last decade has been the understanding on the behalf of politicians that the most critical element to maintaining power is to get the economy on stable footing. So in 2006, when Lula ran for re-election, there was a major political scandal there, but yet he was re-elected in a landslide because the economics were sound. And so in some respects, it doesn't really matter who the president is in the next election, as long as the policy is taken care of. And we have every comfort that the policy in Brazil will remain sound.
So you are still a fan of the real right now?
We're a fan of local markets debt in Brazil.
Okay.
You get paid roughly 12.5% in nominal terms to own Brazilian onshore debt. This is with inflation of roughly 4.5%. And with a stable fundamental outlook. So to us, that looks like great value.
Now, looking around the world, I mean, there are countries planning Eurobonds in Africa, in North Africa as well. I mean, tell me where you're finding the most opportunity globally.
Yeah, I think you're right. There will be some new issuers coming to the market. Certainly, there are some African nations looking to tap the market. I think the important thing to keep in mind there is that those markets are relatively small, and investors can get very excited very quickly about those markets and erode that fundamental value. We want to make sure that we're focused on places that have good transparency of data, good transparency of government, and yet offer compensation levels which are attractive to our investors. Right now, in our mind, the clear winner in those categories are local markets in Brazil, local markets in Mexico, and on the hard currency side, We also favor some corporates and quasi-sovereigns in Brazil, in Mexico, and in Russia.
Okay, Michael, very quickly before you go, we have looked at the Brazilian market actually just start to erase its drop. Are you buying right now if you are such a fan of Brazil?
We're pretty consistent buyers of that market.
Okay.
We have a number of different clients that increasingly let us go in and purchase those onshore securities.
Thank you, Michael.